reduce risk. Stablecoins are rising in use for low volatility trading. The law requires full dollar backing for each coin. Critics say it lacks enough protection for consumers. Crypto firms spent millions lobbying for regulation. Trump now backs the bill and plans to sign it. Bitcoin hit $120,000 on the news, but wider reforms remain uncertain. For more on this, we're joined by Alex Leschik in Washington. He's the founder of AI platform ZEN. Good to have you with us, Alex. Now, is this legislation truly a breakthrough or just political theater?
Absolutely. Thank you for having me. I think it's a little bit of both. So the breakthrough aspect of it, you do have a one-to-one reserve requirement, which requires real auditing and backing. And it ensures that things like Terra USD or the Luna environment, which had TUSD as a stable coin, wiped out roughly $45 billion in about a 48-hour period because the TUSD stablecoin in the Terra Luna ecosystem depegged from $1. I think it went down to 70 cents during its first drop, and that caused the token to drop from about $120 to at 1.6 of a penny because it continued to mint more coins. But I think that aspect is great. So you have to provide, for lack of a better term, receipts, and can't just say take our word for it as some stablecoin providers used to. But I do think during an election year, you do have the election optics, specifically Trump's crypto circle trying to make headlines with a few breakthroughs and things that they may be jumping the gun on that might need a little bit more time to play out and develop.
And will this actually make stablecoins safer for everyday users?
I think it'll make it safer if it's enforced. There's about $161 billion in stable coins. That's more daily volume than most payment networks and payment providers such as Visa. So it's increasingly used for cloud compute and artificial intelligence payments as well. So I think if you start to tie it to these real world use cases other than what traditional finance is already tied to, that can continuously provide a more robust framework for security and allow the consumer to operate a little bit more safely and feel safer, maybe taking paychecks in a stable coin. I think the caution and the area that we need to stay aware of would be that 72% of stablecoin transactions are already outside of the U.S., where there's a lot less oversight. It's harder to track where these assets are going, and also make sure that we are indeed ensuring that there is that one-to-one backing, whether it be with USD for Pax Gold, the coin tied to the price of gold, what's actually in their reserves. Are we actually auditing them and not just taking their word for it? I think would be a huge practice that we need to stick to.
And how has President Trump's business interests shaped this policy?
Very much so, I believe personally. So there's direct ties. 6 Trump advisors have stake in stable coins and crypto firms, including those working on decentralized compute for artificial intelligence and automation. And then of the 57 amendments, 9 align with lobbying groups linked to both crypto and cloud AI infrastructure. His son-in-law, Jared Kushner, has heavy ties with SUI or SUI, depending on how you say it. It's SUI. It's a similar blockchain network to Near Protocol, who I'm a personal fan of. But I think things like that really can muddy the waters when it comes down to the details and the fine print as to how these laws play out and these regulations shape our future in working in a decentralized ecosystem. So the 24-month grace period for existing stablecoins gives big platforms, some of which are experiencing with AI-driven infrastructure, a head start over new, potentially more innovative players. It's no secret that USDC, also known as Circle, and Tether are the biggest players. Both had gone through their own growing pains when it came to proving their one-to-one reserves to United States dollars, but they definitely have a massive head start over, say, you or myself starting our own stablecoin provider.
And could this bill help or harm crypto's mainstream future?
I think you see it help the future long term, or definitely short term, because of the security and the dialogue that's now been put forth into almost everyone's lives. Morgan Stanley says clear rules could draw up to 1.5 trillion in institutional investment, which is huge, but still somewhat of a drop in the bucket compared to gold. Gold is at about a 16 to 17 billion, 16 to 17 trillion dollar market cap. Cryptocurrency, with Bitcoin having about a 67% dominance over all crypto coins, is about, I think this morning, maybe 3.1 trillion. So there's still a lot of growth to go. And a lot of the biggest players, BlackRock, Vanguard, they've all pretty much jumped in and dove in, throwing billions into this. So I think in the short term, you do see, Bitcoin continue to rise. Arbitrary numbers in the crypto world seem to matter for one reason or another. So I think you could see Bitcoin go significantly higher, at least to $150,000 in the interim, maybe the next year or so. But I think long term, what we need to do is make sure that these stable coins don't become too diluted. We don't have, a copy of a copy of a copy, and we allow real use cases to take shape and take form, and don't just make it a riskier version of, a fiat currency that's a little bit more convenient. I think that's one of the biggest things also would be to see how it plays out with artificial intelligence. Myself being a huge artificial intelligence investor and advocate, we would like to see a lot more use cases in the decentralized compute power world where you're able to, kind of leverage those tokens and put it to work a little bit more than you would with traditional fiat money.
Right, we will have to wait and see. Alex Leschik in Washington, founder of AI platform ZEN. Thank you very much for joining us.
Thanks for having me.
US President Donald Trump has announced additional tariffs on all Mexican